We're getting some news on the Volcker rule this morning. Dominic Chu has more on that. Dom?
All right, so, Carl, what we have right now is the FDIC, the Federal Deposit Insurance Corporation, now approving some rule changes to the Volcker rule that will clarify rules on what banks can and cannot do with regard to using their own money for investing purposes. In this case here, the FDIC has approved some changes that will allow banks to use their own capital to facilitate client trades, otherwise known as principal trading or market-making activities. It will look to allow some of those trades to actually happen. Another version of this was already signed off on by the Office of the Comptroller of the Currency earlier this morning. 2 agencies there, 5 in total, have to approve these particular changes to happen. The Federal Reserve, the SEC, and then also what's happening with the CFTC. Those 3 agencies are still yet to sign off on this, but in total, David, this could be a big change in the way that banks are allowed to actually use their own money to take positions on behalf of clients and to facilitate client transactions. We'll keep an eye on the other developments here, but that's the latest for now. David, back over to you guys.
Yeah, they had been complaining, Dom, for some time that it was sort of unclear to them, a bit subjective and unclear overall, the rule that was preventing them from doing so. Interesting, though, no real reaction in the share prices. You might expect that as we get closer to this rule change taking place, the Goldman Sachs, for example, shares might go a bit higher.
Yeah, I mean, and that's the interesting point here. First of all, these changes have been talked about for, at this point, years. This idea that they could be looking to change the Volcker rule. You wonder whether or not a lot of the reaction that's been taking place in the bank stocks going over the course of the past 6 to 9 months has already incorporated some of this expectation. I mean, President Trump's administration has been taking active steps to actually loosen up some of these banking regulations. So perhaps a little unclear even for investors right now how much has already been expected for this move. I'm sure as the Fed, the CFTC, and SEC do their own, we could see perhaps a bit of a movement in those bank stocks, David.
Well, do we know what the scope of actually the banned trading is? I mean, how substantial is this of a change from the 2013 law?
So
do we know that yet?
Yes. So it will clarify some of the points on trades that are held short term with regard to, say less than 60 days. Some of those particular moves there are meant in some ways to help clients facilitate their transactions with a bank. Say a Goldman Sachs says, we will buy your shares from you principally rather than find a buyer for you on an agency basis. So some of those types of trades are the ones that are going to be more affected by this particular rule change. Sarah, to your point there.